Welcome to the Deep Dive, your shortcut to understanding what truly matters in the world of earnings calls. Today, we're diving deep into Delta's Q2 2025 results. This is a company that's been strategically repositioning itself for a while now. And these numbers, well, they show that pivot is really starting to pay off. Big time.
Absolutely. I mean, this earnings call, it offered some really compelling insights, especially into the current market dynamics,
Yeah.
how strong execution is meeting that burgeoning demand and AI infrastructure. It's a great example of a long-term strategy just hitting its stride.
All right, let's unpack these numbers then. Delta delivered a truly stellar Q2 2025. We're talking all-time highs across a number of key metrics here. Revenue reached a record NT $124.0 billion. That's new Taiwan dollars, of course. That's a robust 20% jump year over year. That's not just growth. That feels like acceleration.
Yeah, exactly. And that impressive top-line performance, it translated beautifully down to the bottom line. IFRS EPS, that's the earnings per share, it soared to a new historical high. NT $5.37. And what's more, the gross margin expanded significantly, 35.5%.
Wow.
And operating margin hit an unprecedented 15.1%. These aren't just, small incremental gains. These are standout figures. Really signals a very healthy, high-performing underlying business. It looks like they're fundamentally changing their profitability profile.
Right. Management did mention, though, a slight headwind. The strong NT dollar appreciation against the US dollar. It tempered the reported growth just a touch, but, certainly didn't dampen the overall record-breaking performance.
No, not at all. If anything, it just highlights how strong that underlying business momentum really was.
Okay, so here's where it gets really interesting for us. Because these weren't just big, isolated numbers, right? That NT $124 billion in revenue. It was also up a solid 4% quarter over quarter. So that shows consistent sequential momentum, not just looking back a year. What does that tell you?
Well, it speaks to incredible consistency and just strong demand. But what's truly noteworthy, I think, is the margin expansion we saw.
Yeah, tell me about that.
That gross margin, 35.5%. It improved from 31.8% in Q1
Right.
and 34.1% a year ago. And this wasn't accidental, It was primarily driven by robust shipments from their data center-related businesses. And passive components, too.
Oh, okay.
So what this tells us is a very favorable shift in product mix. They're moving towards higher value, more profitable stuff.
Right. They're not just selling more, they're selling better.
Exactly. Operating profit, for instance, surged an incredible 42% year over year. Even EBITDA hit an all-time high of NT $26.8 billion. Really showcases how well they're leveraging their operations as revenue scales.
So if we look underneath these impressive headline numbers, what does it mean for their individual segments? Because it sounds like it tells a tale of two very different performances. Really highlights that strategic repositioning we mentioned earlier.
Absolutely. The infrastructure segment was the undeniable star of the show.
Okay.
Revenue there jumped an astonishing 53% year over year.
53%.
And get this, profits skyrocketed an incredible 417% year over year. This was directly tied to that robust, almost insatiable demand coming from AI data centers. It's a clear sign. Delta isn't just participating in the AI boom, they're really leading in some critical areas.
And their power electronics segment, that also showed solid growth, right? Revenue up 17%, profit up 19% year over year. Again, benefiting from that same data center tailwind and, the broader need for high-efficiency power solutions.
Exactly.
But what about the other parts of their business? Were they all riding that wave?
No, not at all. And this is where that strategic pivot becomes even clearer, I think. Other segments faced pretty significant headwinds. Automation, for example, saw revenue decline 1%. Okay, not huge, but profit plunged 64% year over year.
Ouch.
Yeah, impacted by broader macroeconomic challenges, especially in industrial sectors. And mobility continued to struggle. Revenue down 5% year over year, and it actually swung to a loss.
A lot.
Yeah, amidst ongoing market weakness and some product transitions they're going through. So the stark difference here really underscores the company's intentional strategic pivot towards AI infrastructure. They're effectively doubling down on areas with strong market tailwinds while managing those facing slowdowns.
Makes sense. So given these strong results, this clear strategic focus, management's outlook for the second half of 2025, it was pretty bullish, right?
Oh, very bullish.
Right.
They expect it to be even better than the first half, primarily supported by what they see as steady and durable demand from AI data centers.
And didn't we see July sales numbers come out after the call?
We did, yeah, strong numbers.
Yeah.
Like 21.6% year over year.
So that gives an early positive glimpse into Q3, supporting that optimism.
Exactly.
But this raises a really important question, I think. How exactly are they addressing the very specialized, evolving needs of AI data centers, particularly when it comes to cooling and power? Because those are massive challenges for AI, right?
Yeah. Oh, absolutely critical. AI servers generate immense heat. They need unprecedented amounts of power. Delta highlighted its comprehensive product footprint. They have both advanced power and cooling solutions. For liquid cooling specifically, they're seeing liquid-to-air solutions gaining significant traction.
Liquid to air, why that specifically?
Well, mainly because of faster deployment times. And they already hold a high market share in that area. So that gives them an immediate competitive edge in a market that needs solutions now.
Okay, so liquid to air is faster to deploy. But liquid to liquid cooling, that often offers better energy efficiency, doesn't it? And lower cost for the cooling unit itself.
True.
Is Delta kind of missing a beat there, or are there good reasons for this preference?
You're right, liquid to liquid is more energy efficient long term. But its widespread adoption faces pretty big hurdles. Think about the infrastructure complexity, much higher initial costs, and crucially, longer deployment times. It often means entirely new data center builds or major retrofits. And operators are often hesitant to do that quickly when they just need capacity, like yesterday.
Got it. So Delta's capitalizing on the immediate practical needs.
Exactly. They also showcase some innovative containerized solutions and HVDC, that's high voltage, direct current AI data center solutions. They recognize the trend towards centralized rack power supplies for these increasingly complex AI servers, especially for platforms like Kyber, which demand extremely high power. So you need higher voltage DC specs to manage the current and heat more effectively.
Okay, interesting. Let's pivot a bit. Their manufacturing strategy and how they're handling global tariff risks. That seems pretty relevant right now. What's fascinating, I thought, was their long-term diversified manufacturing footprint. They started this back in 2015.
Yeah, way before the current tensions really ramped up.
Yeah.
And that diversification has certainly paid off. Management noted that most customers actually agreed to absorb the additional U.S. tariffs in Q2.
Oh, interesting.
Yeah, so it minimized the overall impact on Delta's bottom line. And while they are expanding capacity in the U.S., they said it's primarily for customer proximity, offering better system solutions and services on the ground, Not really a direct reaction to tariffs.
So not just chasing lower costs or avoiding tariffs necessarily.
Right, because full component manufacturing in the U.S., that remains really challenging. Much higher labor costs, obviously, but also, importantly, the absence of a complete, robust supply chain like you have in Asia.
Right.
System assembly, sure, that's feasible in the U.S., but replicating Asia's vast component ecosystem, that's a whole different ballgame. Much harder.
And their R&D commitment, how are they balancing this huge current demand with innovating for what's next?
They plan to maintain R&D spending at around 9% of sales. That's a pretty significant commitment.
Yeah, that's substantial.
And their focus isn't just on, refining existing businesses. They're also exploring new areas that align with their core competencies, natural extensions. This sustained commitment, it really underpins their long-term innovation, shows they're playing the long game, not just reacting quarter to quarter.
Speaking of new areas, they mentioned expanding service revenue in data centers through M&A. Looking at white space and gray space opportunities.
Yeah.
What does that mean exactly?
Yeah, basically it's about providing services for the currently undeveloped areas within existing data centers. The white space is where the IT equipment goes. The gray space is the supporting mechanical and electrical infrastructure. So services around building out or managing those spaces.
Okay. And here's another surprise that caught my ear on the call. Humanoid robotics. They think that has enormous potential.
Yeah, that was definitely a bit of a curveball. They're even launching a dedicated robotic research center this month in August to dig deeper into it, with a focus on software-driven AI and trying to distinguish between, industrial robots versus service applications for robots.
Interesting.
It really highlights their incredibly forward-looking strategy. They're thinking beyond their immediate core into what they see as major future growth areas, really trying to understand the underlying tech and applications that could define the next decade or so.
Okay, so summing up, record numbers, clear AI growth driver, ambitious future plans, even robotics. How did the market react to all this? What does it mean for investors?
Well, the market's response was overwhelmingly positive, really confirmed investor confidence. The stock saw a significant bump, rising 3.7% into the next trading session.
Okay.
And that was on substantially higher volume too. So real conviction there. It aligns perfectly with management's constructive outlook and, frankly, the impressive results they delivered. It's a strong affirmation.
Yeah, it certainly feels like the market isn't just acknowledging, but actively affirming their multi-year repositioning. That move towards full-stack power and thermal solutions for AI data centers. Investors clearly see that strategic shift is paying off tangibly.
Indeed. And if you connect this to the bigger picture, the stock has significantly outpaced the TAIEX benchmark. That's Taiwan's main stock index. We're talking returns like 28.2% over just 1 month leading up to the call.
Wow.
And an incredible 75.7% over 3 months up to August 22nd. That kind of dramatic outperformance, it speaks volumes about investor confidence in their AI strategy and their ability to execute on it.
So, looking ahead then, what are the key catalysts? What should we be watching to see if this momentum continues, if this story unfolds as expected?
Okay, definitely keep an eye on the Q3 2025 results and the analyst meeting, probably late October.
Right.
Continued monthly sales prints are always important for tracking momentum. Any major AI data center design wins they announce will be huge confirmation. Also, updates on their ACT Genomics acquisition, the EMEA HQ build. Those signal progress on broader initiatives. And of course, keep an eye on broader macro and trade headlines, especially how they might impact capital expenditure plans for 2025. But really, the key watch item for the second half, I think, will be their ability to sustain these record-level margins, especially as the AI programs scale up significantly and hopefully as the automation segment starts to stabilize. Margin sustainability is key.
Got it. All right, it's time for our This Is Not Financial Advice segment, where we pitch an outrageous but maybe plausible trade idea straight from the earnings, call tea leaves. What have you got for us?
Okay, all right. Disclaimer up front. Definitely not financial advice. But given Delta's strong Q2, their clear dominance, as we discussed, in liquid-to-air cooling right now, and their readiness for mass production of those centralized power racks for AI. Here's the thought. Of course, you could just go long Delta stock. It seems reasonable based on the call.
Yeah.
But to play the nuances we talked about, consider this. Maybe simultaneously buying a short-dated, out-of-the-money put option on a pure-play liquid-to-liquid cooling infrastructure solutions provider, specifically one that lacks a strong liquid-to-air portfolio.
Okay, playing the cooling angle.
That's exactly. The earnings call made it pretty clear that while liquid-to-liquid is efficient, its significant infrastructure complexity, the higher cost, the longer deployment cycles, those make widespread adoption challenging in the short term. It often needs new builds or major retrofits, remember?
Right, the hurdles.
So this suggests a potential near-term drag on companies heavily invested only in that specific, more complex solution. While Delta is perfectly positioned for faster adoption of its liquid-to-air systems right now, it's basically a directional play on the pace and the practicality of how different cooling solutions get adopted in this current AI build-out cycle.
Interesting angle. A bet on the timing of adoption, not just the eventual winner.
Precisely. Again, just a thought experiment.
Duly noted. And that wraps up our deep dive into Delta's Q2 2025 earnings call. I mean, what a quarter for them. AI data center demand clearly driving record revenue, record margins, and a really bullish outlook for the second half. Their repositioning seems truly transformative.
It really was a masterclass in capitalizing on a rapidly evolving market. Showcased both strong execution and real strategic foresight. The company is clearly positioned right at the forefront of this whole AI infrastructure build-out. It's fascinating to watch their strategy unfold in real time. What stood out to you most about Delta's incredible quarter? We always love hearing your thoughts and questions on this stuff.
And just a reminder, everything we discussed today is strictly for informational purposes. It is absolutely not financial advice. We hope this analysis gives you a clearer picture, though, of Delta's performance and maybe its future potential. Thank you for tuning in to the deep dive. We'll be back soon with another earnings call breakdown.